A working condition fringe is basically, if you paid for it yourself, you could deduct it. That's the deductible if paid by employee test. So when the employer provides the property or service so you can do your job, it's generally excludable from wages. On the EA exam, they'll test whether the item is truly job-related versus personal, because personal value usually becomes taxable compensation. Common examples are trade journals, required safety gear, and job-related education. If it's required or directly improves skills for the current job, it usually fits. But if it's personal or it's really a perk, it doesn't. Exam tip: don't overthink nice to have. The question is whether it's ordinary and necessary for the employee's work, not whether the employer thinks it's motivating. Company vehicles are where they love to hide the taxable piece. Business use is a working condition fringe, but commuting and personal miles are taxable fringe benefits, and the value gets added to wages. The big exception is qualified non-personal use vehicles. Vehicles designed so personal use is unlikely. If it's qualified, even limited personal use is generally not taxable. So what counts as qualified non-personal use? Think police cars, fire trucks, hearses, school buses, cement mixers, tractors, stuff you're not taking to the mall. Also, any vehicle designed to carry cargo over 14,000 pounds automatically qualifies. But a regular pickup used for weekend on-call commuting, usually not qualified, so that commuting value becomes taxable wages. Employer-provided cell phones can be a working condition benefit, but only if there's a substantial business reason. That means the phone is needed to reach you, contact clients, or handle work when you're away from the office. If the real reason is morale, recruiting, or extra compensation, it's not a working condition fringe. On the exam, look for facts showing business necessity. Now reimbursements. Accountable plan versus non-accountable plan. Under an accountable plan, the employer deducts the expense, and the employee does not pick it up as wages, so no income tax withholding and no payroll taxes on that reimbursement. Under a non-accountable plan, the payment is treated like wages and hits the W-2 with all the normal employment taxes. To be accountable, 3 things matter. 1. The expense has a business connection, incurred while performing services as an employee. 2. Adequate accounting within a reasonable period. Think receipts, mileage logs, dates, business purpose. 3. Return of excess. If you got an advance or allowance above actual expenses, you pay back the extra within a reasonable time. Miss any of these, and the plan becomes non-accountable for that employee. What happens when an employer's cafeteria plan favors highly compensated employees or key employees in contributions, benefits, or eligibility? The choices include an excise tax on the employer, adding taxable income to the favored employees, disallowing all compensation deductions, or treating the plan as a prohibited transaction with suspended benefits. Think about it. The correct answer is that the favored highly compensated or key employees must include in taxable income the value of the taxable benefits they could have selected or received. That's the non-discrimination consequence. The tax-free treatment is lost for the favored group, not a blanket penalty on the employer. The excise tax option is tempting, but cafeteria plan failures typically shift taxation to the favored employees. Which asset used in a business would not be classified as listed property by the IRS? The options are photographic equipment, video recording equipment, farming equipment, or passenger automobiles rated at 6,000 pounds or less of unloaded gross vehicle weight. Think about it. The correct answer is farming equipment. Listed property is the category the IRS watches closely for personal use, like passenger autos and certain camera and video equipment. Farming equipment generally isn't treated as listed property. A tempting wrong answer is passenger automobiles, but those are classic listed property when they meet the weight threshold.